Morning, Chris. How you doing?
I'm great. How are you, my friend? Nice to see you.
You too. This is Brian Jones. I'm here with Chris Hood, professional options trader, world's most interesting man.
With a full hand of fingers this week. My finger has
Yeah,
healed.
that's
Yeah.
awesome.
Yeah,
You
I'm
just
practicing my royal wave.
so was it a dislocation or did you just a
It,
sprain or
it
what?
seems to be clicking. I'm going to go with my highly trained diagnosis of it's just a sprain and I'm old. But I don't know. It keeps clicking in and out. So I've got a feeling that the joint is a little unstable. But you know, I'm
Yeah,
still rolling with one
if
hand.
it's a sprain, it could be the ligament could be stretched and it's kind of
Yeah.
not quite stable. Just
I
tape
think
it
it's
up.
something like that.
Just tape it. Just tape it together.
Can't keep an old elephant down, man. You're gonna
Uh,
need a rhino gun.
the jiu-jitsu mat tears up fingers.
Oh man, the gi. Oh, when you get caught in someone's gi and he pulls it and you told your hand to let go and it just won't, it's
The worst the worst for me are when I do things like I just have my hand in an awkward position and somebody's head runs straight into it, or I take a fall and like my hand is, it just drives my fingers straight into the mat.
and it's always the same finger. The ring finger on both hands for me and my thumbs are the ones that get nailed the most.
Yeah.
So I don't know. I think you become so conscious as you get older of hooking your fingers like this and sort of
Uh-huh.
climbing. I don't know.
Slothing up them.
And I know that we're all on the path to developing witches' hands, my friend. Jiu-jitsu fingers are not used in marketing shots for rings, that's for sure.
No, for sure. No hand models here.
No,
So
definitely
the
not.
what let's talk about this Christmas, this potential hopeful Christmas rally that's getting ready to pop off.
Well, it certainly fooled us all yesterday. The last 30 minutes of yesterday was a pretty wicked reversal. Although I have to look at it from this context, right? We're now in a situation where if the market's extended, it's extended. And as traders, we got to be really careful not to be drinking the Kool-Aid, because if you drink the Kool-Aid and think that just because it's going up, it's going to carry on going up, you could put yourself into a bit of a pickle. So you have to look at things over different time frames. When things get extended in the short run, there's always a reversal to the mean. When the reversal happens, it's a buying opportunity as long as the market stays in trend. The key is staying in trend. If it breaks trend, right? So it falls below the Ichimoku cloud, for example, or it's now below the 21 and there's no clear signs of support. The next line is the 55 or the 34. We have to always recognize that. And on different time frames, in the weekly time frame, we're still fine. This is normal. And I think a lot of retail guys, they tend to be referred to as the weak hands in the market, and they're a great source of liquidity. And this comes down to the point of a lot of people read the same books and do the same thing. There's absolutely zero trading edge on anyone doing the same thing as everyone else. There just isn't. And I think you're fooling yourself as a trader to think you have an edge against the big machines if you're doing exactly what everyone else is doing. Putting your stops where everyone else puts their stops, for example, is just going to get you flushed out of the market. So, strength on holding is important, but knowing when to fold is also important too. So, stay in trend. I think that the fourth quarter rally, after Thanksgiving, it tends to get underway. This week is going to be low liquidity. It's seasonally a slightly bullish week leading up into Thanksgiving, where you would buy on weakness and then sell into strength. That's usually the case around this time of the year. But again, it comes down to your own trade plan, right? I can't time the market. No one knows what's going to happen tomorrow. If anyone turns around and says, this is what's going to happen, they lie. No one knows. Yesterday morning, everything looked great at 20-4 yesterday afternoon.
Any thoughts on the sell-off? What do you think that was?
I think,
It wasn't really a sell-off, I guess. It was just a little bit of a.
I don't really pay much attention to stuff like that. I'll tell you why. Whatever my thoughts of the reasons behind it are completely irrelevant. It's like it's going to happen. It's natural price action. What causes it, whether it's going to continue or not, you've got to appreciate the cycle in the market, right? Prices go up, prices go down. When they're too far up, they come down. When they're too far down, they go up. Whether you've got indicators or formulas or whatever you use to identify and analyze the market, that's what's important. If you're using a crappy indicator, you're going to get crappy results. It's that simple. You can't out trade garbage. That's the problem, right? So a lot of people get trapped in the sort of and I know this because I was trapped there before. You become indicator junkies. You keep buying more and more and more because you keep searching for that holy grail of the one signal that will guarantee you success.
Right.
So it reminds me of those body spray, cologne, deodorant adverts from the 1980s.
Yeah.
You're guaranteed to get the girl if you use this. You're guaranteed to get the pot of gold if you use this. And I think that's part of the problem, is that I made the fundamental mistake of clicking on a Facebook ad where someone was claiming to have a phenomenal trading system, and I clicked on it. And now I just get this feed. I don't know. I need to try and tweet Mark Zuckerberg and ask him to turn it off, because I just get every single thing that's out there now comes into my Facebook feed about how easy this is and how easy that is. And I look at this stuff and I'm like, oh, I just pray that no one watching this stuff falls for that garbage, because it's
just a combination of things. Your Google search history, your phone's listening to you. They know you're a trader, so they're just going to blast you with every trading ad. And then you clicked on one, which makes it.
Oh my God, that was it. I tapped out.
Yeah, they got you. Out. They're like, oh, he likes these ads. He wants to win big.
I have never in my life seen such stuff. I shouldn't say this, because you know what? At one point in my trading career, I fell for it hook, line, and sinker. I bought everything out there. I mean, I must admit, I still buy a lot of indicators, not because I use them, but I want to understand the logic behind them. Because I think at the end of the day, when you build your trade plan, you can have 25 indicators that are the world's leading indicator for anything that you want. But if you don't follow it, it means nothing. That's ultimately what it comes down to, is that if you don't follow and execute the trade, the signals mean zero, right? That's bottom line. So building up to getting the confidence to be able to do that. And I apologize for the geese in the corner. They are getting shipped out. Makes my room look like a little messy. You've got to build a proper plan. And unfortunately, most retail traders don't have the discipline to do it. They don't have the knowledge to do it. So when someone says build a plan, they go, well, what the hell's a trading plan? They have no idea what it looks like. They don't know what data they need to use. And that's part of the educational process. And there are tools around, and I know I'm developing some tools that are going to speed that learning curve up for people, because the quicker you can get to the point as a retail trader to realize what you need to be successful, rather than buying into the BS of you just need this one thing and this one thing and this one thing, the better you're going to be, the better off you're going to be. I mean, this is why I'm so against these trading rooms kind of thing. I just don't buy into it. I've not seen them add value to me when I did use them many years ago. I think it's more destructive than anything else, because what happens is you have people in rooms that have got varying degrees of experience. You might have some guy who's got really high level of knowledge. He puts a trade into a sheet, whatever they use to chat. Some guy who's a novice guy has no understanding of the trade in the first place, puts it in with no knowledge of risk, no knowledge of where he's going to get out, where his profit levels are. All he has is the trade. So he doesn't actually know how to manage it. Next day, he comes in, sees the trade up 100%. He doesn't know that the guy who did the trade's already out of the trade. He sits in, he goes, oh my God, this guy's a genius. And he stays with the trade. And 2 days later, it's back to minus 50 because he didn't get out. He didn't know where to get out. That's what happens 90% of the time. So, I'm not a fan of the chat room mindset. It doesn't make you a better trader. What it does is it gives you more information, but it's hard to use. So, rather than having, 99,000 people telling you all at the same time, do this, do this, do this, do this, and you've got no filter that tells you whether that's actually in line with your plan and your strategy as a trader, you're not going to get any better. You're just going to end up throwing good money after bad ideas, and it becomes a waste of time. And that's what happens in sell-offs.
Yeah, I think that it's better to just find someone who knows what they're doing and then listen to them, learn from them, and at that point, then you have your one source of information, your one source of counsel, and then just kind of ignore everything else.
It's hard though, because you overrun. In today's day, information is cheap, right? It's no longer the commodity that it was, right? If 20 years ago when I first started trading, information was the edge. If you had information faster than someone else, you could trade better. Now everyone gets the same information at the same time, right? So edge is no longer information. The edge is what you do with it. And if 47,000 people are all trading the same signal, you have no edge, because someone's going to win and someone's going to lose. So not all 40, let's imagine that the market was 100,000 people and 75,000 people are all trading the same signal. If the 25,000 people who don't trade that signal found a way to actually create an edge against those people, they would trade it, right? So it's such a hard part to try and explain to people. It's difficult for me to verbalize, because trading edge is not about information. It's about your ability to use it. And you can, as a retail trader, create immense edge in your trading by interpreting data perhaps slightly differently from the mainstream. So if the mainstream are doing one thing and you do another, take for example, timeframes. Timeframes is a major way. Most people don't trade the 39-minute chart. They don't trade the 163-minute chart. They don't trade a 111-minute chart. And when you have these obscure timeframes, there are patterns that form in these obscure timeframes that most people won't see, because they're all on the hour or the 30-minute or the 2-day or whatever it is. So I do that a lot. I try and use signals from different timeframes and apply them to other timeframes and try and create the edge that way. I mean, we've got some pretty innovative stuff that we've got on our side, but it's hard to talk about it because the more people who do what we do, the less effective we become, right?
Right.
So, when I see traders going out and, oh, look how rich we are, look how great we are, I'm like, well, you've got to look at what the business model is for those people. Is their business model actually the trading, or getting you to believe that the trading is what's happening, right?
Yeah, I wonder about that sometimes. It's like, it's like selling this book on how to get rich. It's like, and it tells you to sell books on how to get rich.
Exactly.
First of all, step one, write a book. Write a book. How to get rich.
Yeah, I mean, there was a scam in the 80s. I remember it was about stuffing envelopes at home. Do you remember there was this whole crazy?
I vaguely remember that, but
yeah, it was like, if you want to get rich, what you do is you charge $5, for the person to get an envelope, right? So, or something like that. And you send out more envelopes, you get paid more money, kind of thing. It was some sort of weird, stuffing envelope kind of thing. I look at it and I go, if 55,000 people are all doing the same thing, you are not going to create an edge to make yourself any money. And, I'm very sensitive. Some of the stuff that we've built in our small, very, very small community are fairly innovative in terms of their results and in terms of what they can do. The challenge that we have is there's a fine line between talking too much about it and keeping it to yourself, kind of thing. The business model that I try and promote to people is trading should be the bulk of the money that you make. It should not be made up by having a large community of 25,000 people in a room. Because I tell you what, if you've got a trading room of 50,000 people all paying $100 a month, you can afford to do shitty trades. Oh, excuse my French, but you can afford to take crappy trades because you've got a lot of money coming in, right? So, is your business model more about the trading community and paying the monthly fee, or is it about your trades being really good? And, 9 times out of 10, those guys are going to take the easy road, which is the fees, right? So be careful. If you're out there listening to this, just be sensitive to that. The business model of any form of indicator guy or whatever, if the indicators were that good, I can promise you they would never be selling it. So, there's a big difference. And this is something that we struggle with on our side. In all fairness, we've got indicators that have got extremely high win rates, and we've got a lot of stuff that's pretty good. I mean, you've seen the stuff that we do. But, we're not keen to, go out and broadly advertise. When I see these guys advertising on Facebook, I'm like, takes a special kind of person to be handing over that kind of money on a monthly basis without some sort of return. I mean, most of these guys won't even back test their own strategies. What they do is they show 1 or 2 trades. Okay, yeah, it was good, but they don't tell you about the 90 times they lost money. And that's another thing, right? If you can't back test anything with a degree of transparency or certainty, how do you know? You just don't know. It's like, okay, well, I trust this guy because he's got 17 or $20 million. Okay.
But he says he does on the video.
Well, he says he does, but then at the end of the day, he might have started with 100 million, right?
Yeah.
He didn't tell you what he started with. Look, I don't want to bash people, right? At the end of the day, as a trader, you have a responsibility to yourself. You have a responsibility to grow your account, and traders will always choose whichever way makes it comfortable for them. If putting your hope and faith in other people's successes is going to rub off on you, if that's the model that you want to do, and I'll be honest, that's what happened to me. 20 years ago, I started off like that. I thought that if I, took the knowledge from other people, I'd make money, and I didn't. But they made a lot of money out of me. They were getting the fees every month. I'd buy every book they wrote. I'd do all of the stuff that they told me to do. It was only until I really worked out what my trading style is, what resonates with me. I'm not a very good intraday trader. I do it, but I don't enjoy it. It's not something that makes me feel good, right? I enjoy capturing large trends. I enjoy that sort of stuff. So once you find your sweet spot, your niche, you've got to build a process around that. And that's the hard part. Most traders won't do that. They just try and, oh, this guy's really good. He made 20 million last year. Okay, I'm going to copy his trades. And then they lose a lot of money. And then they go, well, I've got to find someone else. Then they go find another room, and they lose some more, and then they lose more and more and more, until eventually they've lost everything. And then they go, trading is not for me, and they give up. And they don't have any opportunity to make their money back. So I'm just skeptic. I'm not a skeptic. I think that there is a degree of learning that you can take place on, but you've got to make sure that you weight it correctly. It's like, it might have worked for him. Some people, advertise, oh, look at this trade, 19 million%. You saw the one that we did the other day that had like 120,000%. And then someone called me. It's like, how do you do this? I go, it's a mathematical trick. It's not something that you're not putting $10,000 into a trade and then making 19,000% on it, right? You would never do that, right? The whole idea of those trades is to have less money in and having more upside, right? So they fund these trades. So I think people just, they'll end up getting attracted to this impression of success. There's this impression of success rather than looking at fundamentally what's going to be successful for them and then building from there. So it's tough. Market volatility is the first, as soon as the markets go volatile, all these people come out of the woodwork, and it's like, look how rich I am, look how rich I am, look how great I am, look how great I am. But they never tell people about how bad they are, and those people don't always win. They don't always win, and they never want to talk about it. So it's a tough game. I think at the end of the day, there are many ways to the top of the mountain. You've got to work out which way is going to work for you. And you need tools to help you. You can't climb a mountain with no tools.
Right. So, it's also from experience, it's nice to have somebody to help you, like a person, because the tools, like you said, a book isn't gonna comfort you when you feel like you're losing. Like, you know what I mean? Like calm. It's nice to have somebody be like, hey man, calm down. Like this is normal. Those little psychological things are just, you know, keep your cool, this is normal. And don't like sell out everything you own just because the spreads have widened or the volatility's kicked up, or those things, because that does freak you out when you have a lot of money on the line. That's
absolutely. I think a lot of people, it's hard. I remember when I started trading, I had no concept of risk and reward. Zero. Most traders don't, right? So they don't size right. So when they put a trade in, they've got $100,000 portfolio, they'll easily drop $10,000 into a trade without understanding what their loss limit would be, right? So particularly with options. Options is slightly more complex world because of the math involved in it and everything, right? So they drop 10 grand into a position and the position drops 6, right? So now they've got 4 grand left. And what some traders do is they go, I can't exit now because I've lost too much already. I just hope it, turns around. And that 4 grand suddenly diminishes down to 1, down to 500, and they're down 10, right? No one teaches you that. No one teaches you that. No one will teach you risk tolerance because everyone's different, right? Your ability to stomach a 10 grand loss will be different from that retired pensioner down the road. So, finding your risk limits. How much are you willing to really lose? For me on a long call option, 50%. If I'm down 50% and the signals have changed and they're all going down the crapper, I'm out. I don't care. I'm not sitting there going, oh, maybe, we talked about it earlier, how people tend to manipulate their own interpretation of data to form an opinion that might not be correct. Everyone does it. Everyone does it, but no one's going to coach you out of it. And sometimes you need someone who's going to say, you know what, take your head out of your butt. That's not going to work. If it's minus 60% on a long call position, it ain't coming back. Statistically, the odds are just against you. So holding on to it to lose another 40% so it makes you feel better, that's just stupid. And it happens a lot. And I do tend to call people stupid sometimes because at some point you can't massage data. You can't massage the fact that that's a mistake. And if someone turns around and says, oh, you know what, I'm not going to do it again, that's too soft. The hurt must be painful enough for them never to do it again. It shouldn't be a question of maybe, maybe not, I'll get over it. No, don't get over it. Just don't do it again. Sometimes I'll have clients call me when a position is down 90% and they'll say, what can I do? Stop trading. Like, just cut it out. Like, if you've let a position go to minus 90% and now you're calling me to ask you to dig you out of a hole, can't be done. It's not going to happen. You should have seen the 7 signals that happened on your screen when they came up saying exit, 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 and ask yourself why you didn't exit.
Right. Use it as a learning experience. Just chalk it up as a learning experience.
Yeah. And you know what? You fail. I'll tell you now, you fail. There are times when even I don't follow my rules, for whatever reason. I'm waiting for the day that we can automatically connect our brokerage platforms to our trading view account so that we can automatically trade options. You can't do robo trading on options yet, but one day we will. And I'm hoping that my strategies can then just be applied automatically. It's hard for a lot of people to accept failure. And most people, when they trade to be right. When a lot of retail traders step into the trading arena, they want to trade with a clean sheet for their whole life. They want 100% win rate from the beginning, man. That's what their goal is, subconsciously. It's not necessarily a conscious thing, but subconsciously they do that. And they need to accept that that's not going to happen. At some point, no, it's not going to happen. And they trade to be right. Traders who trade to be right invariably land up being wrong because they don't see the signs of exiting. And, you can have a win rate that's below 50%, but if you've managed your losers well, you can still be highly, highly profitable. I mean, some of the world's best traders operate on win rates of below 40%, but their profit ratios are in excess of 5, 6, 7. Those are the types of traders you want to hang around, not some group of 50,000 people who might be all losing money. I mean, like that,
right.
They should have a setup. They should have a a chat room where you have to provide your profit ratios in order to have access.
That efficiency is just incredible. With a low of a win rate to make that much money, it's like you just know when you've got a good trade and you know how to ride it for all it's worth and how to cut your losses at that point.
You've got to have a system that allows you to see where certain setups. I mean, I was showing you this before we got on, but the differences in return on certain trade strategies using one of 5 different moving averages can be pretty stark. But if you read a book and they tell you to enter a trade, let's say, blanket statements where they go, entering a trade on a crossover of the 813 moving average, right? 813 simple moving average, big broad letters here, works every time kind of thing, is the most dangerous stuff that you can have in trading, because not all stocks operate the same way when it comes to those setups, right? And I was showing it to you before.
I've actually applied some indicators, and just, when you cycle through just like a year's worth of daily data, you can see how much, like some of those things where it was just like, bam, it was just like golden. It's like, if you had bought when that indicator hits, you'd be rolling in it. And the other ones, like, it's just chop.
It's nothing. Yeah.
But then the other signals work better. Yeah,
absolutely. I think it's a combination of understanding a strategy. So in those strategies I was showing you, we were adding at specific points where other triggers were being hit. We were entering our trades on specific triggers. So you enter on a specific trigger with a specific size, and then you would do a specific type of trade. All of those factors build into your plan, right? So those don't happen randomly. They happen through targeting watch lists, right? So we watch a specific set of stocks. We know exactly upfront what's the best setup for SPY, for example. If we want to trade the S&P 500, we know that a specific type of setup works 50% more times than another setup, and it's got a profit ratio that's 100 times better than the other one. So if you don't know which setup has the highest win rate, and with that stock, for example, you're going to trade the wrong one, because moving average crosses, there's multiple variations of it in terms of tenor, in terms of the type of moving average. We have some pretty unique ways of manipulating the setup in such a way to get us an enhanced return. So it's sad, because I think a lot of people, sorry, you're going to see a whole lot of alerts going off now. I think it's sad for a lot of people, because they tend to have, oh, come on. Sorry, now you've disappeared off my screen. There we go. There's just a lot of people who get sucked into this thing of, oh, well, it must work because that guy's got so much money. No, it doesn't. Don't fool yourself with that stuff. So yeah, it's going to be tough for a lot of people. I think 2022 is going to be a difficult year for traders. Mm-hmm. I don't think the market's just going to go, up all the time. I think you're going to have to be pretty smart. And if you've got the wrong tools, or you're in the wrong chat group, just don't go in the chat groups. Chat groups is just filled with, I don't know. It's the sewer system of the trading community. It really is, because you don't know who that person is on the other side. Like, right. Honestly, if you don't know who that person is and he's just spewing out stuff, no.
It's amazing what people listen to with no understanding or even care, it seems like, as to who the person is or what.
It's not. And I think a lot of this has got to do with social media, right? So you have a lot of these social media people, those ones who rent out someone's airplane and then they pretend it's theirs, and they're sitting on the tarmac, whatever. I mean, it's like in the martial arts. You look at guys like these Paul brothers, right? Who do a couple of videos, ride over some turtles, and think that they deserve a shot to go and beat up some geriatric old world champion. I'm like, Mike Tyson is a legend. And the fact that Mike Tyson is even, entering into a conversation to box this dude is an insult to boxers around the world who work their way up. Like, you work your way up on things, you should be deserving of it. This guy doesn't deserve nothing. Like, he's a YouTube guy who killed some turtles, no, I think that the guy needs to be taken out, man. I not taken out, don't get me wrong. It's just people like that. We as a society have become so ingrained in making stupid people famous. Like this is, I don't know, maybe it's because I'm just becoming old and grumpy, but you know,
I'm with you though. I understand.
you know what I mean? It's like, how did these guys get the right? How did they even get an opportunity to fight a legend? Like really? How many people are grinding away in the boxing fraternity for years and years and years, and they never get a title shot? And then these monkeys come along, you know, throw a couple bobs on Twitter, and they get an opportunity to make $100 million with a no knockout clause. That's ridiculous. It's an insult to the sport. So
yeah,
at some point, the jiu-jitsu guys are going to have it as well. You know, you're going to have these clowns that go out, they're going to go watch 2 videos of Gracie in action and then want to go take on Roger Gracie or something, you know, and get paid $50 million. Just, it's stupid, you know. And you know, we should create celebrities out of something that affects our livelihood, like trading. No, you've got to find a proper strategy. It's you can't just copy someone else. Stay out of the sewer, like really stay out of the sewer. You're not going to find people with a lot of experience sitting in the sewer. They've already worked out not to sit there.
Right.
You know, and you don't get out of the sewer by sitting in it.
That's true. Well, Chris, we'll let you get to your trading day, and
thanks, buddy.
Appreciate the wisdom, and we will we'll pick it back up. You guys check out Chris's stuff at Rogue Investing /alpha, and sign up for newsletter and get some info. We'll be back here again next week.
See you then.
Later, man. Take care.
Take care, brother. Cheers, mate.
Cheers.